Welcome, everybody. Steven Sitkowski here. Glad to have you for this week's edition of Market Insights. It occurred to me Thanksgiving is right around the corner. Man, where'd the year go? And I feel like the older I get, the earlier in the year I feel that way. Time just moves. It's great and gentle reminder while you can do whatever it is that you choose to do it. You never know. That clock's going tick tock. But anyway, hope you have a lot to be thankful for this year. Um, there's not a lot going on in the market. The markets are kind of on pause. I will tell you that, when I first started accumulating the data to do this recording for you, the market was up a little bit, but it didn't feel good to me. And I never make investment decisions based on feelings because feelings change. About 15 minutes ago, I was watching a recording from the Met of Hermit the Crab saying Rainbow Connection. If you've never seen the video, I posted on my Facebook page. Um, and there was a whole audience there that had song sheets and they were singing along with him. Oh, man. I don't know why, for me, that is such an emotional thing to watch. But my point is that, then I turn it off and I have a different feeling. So if you're making investment decisions based on feelings and hunches, it's a problem. But there was just something that felt greasy about the markets. I'm going through the news of the day, and most all of it was sort of with a question mark or negative, and that I do pay attention to. And then lo and behold, I pull up the quotes as I'm getting ready to start, and market was down about a 0.5%. Who knows where it'll be when you watch this? But anyway, certainly happy to have you. I've got my ski sweater on. That's just wishful thinking. I can't wait for ski season to start, man. I'll tell you what, the first time that I'm able to put on skis and go down something white, I am all over it. So today it is November the 17th. Hope you had a good weekend. I'm coming off of teaching a 2-day class. It was absolutely a fabulous class. It was just one of those classes where everything was just great. Quick reminder that what we do here is for educational and informational purposes only, not intended as investment advice. But here we go. What's moving the markets or not moving the markets? They're kind of waiting on a couple of things. We got NVIDIA announcing earnings after the bell on Wednesday. Before the bell on Thursday, we've got Walmart. So NVIDIA is going to be kind of the litmus test for AI and Walmart for the consumer. And during their earnings calls, they're generally, they being Walmart, very candid about how the consumer is doing. So we will find out. Alphabet, formerly known as Google, moves higher with the announcement that Berkshire Hathaway has taken a share or a stake in their company, which is generally a good thing. Shows a lot of confidence, after their team of analysts consider pricing and the future of the business. I think that bodes well for Alphabet. There is a chance, or the chance of a December rate cut is coming on down. I will tell you, there was a time where if you looked at the probabilities, chance of a rate cut in December were over 90%. Now they're down to about 40%. And I think this has a lot to do with now the government's gone back to work and we're going to start getting data again. And when we start getting the inflation data, I think we're going to find that inflation's running around 3%. And the Fed's target is 2%. And I think that's going to be influenced. We're also this week going to get the latest jobs report. So if the jobs market looks weak, I think they're going to have to cut rates. If the job market looks like it is stabilized, which by the way would surprise me, then I think they're going to turn their attention over to inflation. So those are kind of the two dragons, right? And they got one sword. So if we think that unemployment is a bigger problem, we cut rates. If we think inflation is a bigger problem, we hold rates because cutting rates is inflationary. It gives people a better opportunity to borrow and buy things. 10-year Treasury has been sitting at this level now for around a month, which is, by the way, a good level for equities. And oil prices, they're not doing a thing. They're just sitting at around $60 a barrel, which is not bad. Price at the pump is, on a relative basis, pretty attractive right now. Market breadth for last week, the things that I like to focus in on, advancers versus decliners. Okay. So we had 300 more stocks on the New York Stock Exchange that went down than up. So that's slightly bearish. But if you look at new 52-week highs versus lows, that's still in good shape. On the New York Stock Exchange, different story on the NASDAQ, which of course is an electronic trading platform and is tech heavy, right? And a lot of these tech stocks have gotten a bit over their skis. So we see basically 2,000 advancers and almost 3,000 decliners. And look at the difference in new highs and new lows. So there's more of a bearish bent to tech and a slightly bullish bent on everything else at the moment. Not enough for me to call it a bifurcated market because, you know, we've still had an unbelievable run in tech this year, not including what's going on today. NASDAQ is up 18, 19% for the year, and it's way up from the Liberation Day lows. Last week's heat map. So what you're seeing is rotation out of this area over here into more defensive parts of the market. Consumer staples, industrials, telecommunication, they typically all pay dividends, and healthcare. Healthcare has been a lagger for at least a year. And now it's starting to play a little catch up. You're getting some selling off of some of these high flying tech names, including NVIDIA. By the way, I don't like how NVIDIA is behaving. So it's down 6% last week, knowing that this week there'd be an earnings announcement. And last time I looked, it was down 1.5% today. So what does that tell us? Market's not sure that it can deliver an earnings report enough to move things higher because this stock is definitely priced to perfection, meaning everything has to go just right in that announcement. If there's any weakness, whether it be on numbers or guidance, NVIDIA's liable to pull back some, maybe another 5%. And I've got a pretty significant position for me in NVIDIA. Not like Warren Buffett, but for me. So this is where the market has moved. So first of all, this is year-to-date stuff over here, right? So most everything is up. The Russell's definitely trailing. But I wanted to bring you over here. So this was Liberation Day. That was all the tough talk on tariffs, which mostly never materialized, certainly not at the level at which they were first presented to us. But you can see the NASDAQ is up 50% off of that level, and it's up 18% year to date. So everything got off the mat, right? And has recovered. The question now is valuations. did they go up too much? And that is subjective. Something that is not subjective. This is what's going on with job openings. It is plummeting. And I think it's a combination of things. I think tariffs play a role in this. In fact, I'm sure that they do. And I think AI is starting to chip away at the jobs market. When you have computers that can do the work of an individual, when you have an AI powered robot, that's the reason companies are investing all this money into AI. They want to replace workers. So I think it's starting to happen. At least that's what it looks like to me. We'll see what the jobs number is this week. And the winners, kind of a mixed bag. If you come over here to the various sectors, they're all over the board. We have Albemarle was up. Most of these will be earnings driven, up 25%. Expedia, 21%. Akamai, 21%. Solventurn, kind of interesting name. I don't know if it's Dutch or if it's, hey, we solved the problem and turned things around. Solventurn. Yeah, I like that. I have no idea what the hell they do, but it's an interesting name. Up 13%. FactSet, almost 10. There's Eli Lilly. So there you get a little healthcare exposure, 9. Cisco, who was a friend of mine, up almost 9. Becton Dickinson, almost 9. Newmont, there's a gold miner, um, up almost 9. And LabCorp. Yep, they've tested a lot of my blood over the years. Here's market sentiment. So you can see week over week that has declined. So last week, 38% bullish. This week, 31.6. Check this out. 49.1% of independent investors were bearish for the next 6 months. Historically, that's 31%. So people are nervous. I think people are hearing about some of the struggles. I think part of that is a hangover from the government shutdown. But I follow that every week, as you know, and of course, report it to you. Let's take a look at the charts. Everything we need to know is in the charts. All right, let's go to the SPY, which is a proxy for the S&P 500, which is an index consisting of 500 large cap stocks. And it's still kind of honoring its 50-day moving average, but I mean, it is sitting right on it. Now, does that mean if it breaks below the 50-day for a day or two that the sky is falling? It doesn't, but it's definitely a red flag. And you can see for the last 6 months, we have lived above that yellow line. And that yellow line is definitely acted as a level of support. Will it do so again? I think a lot of it is going to have to do with the numbers that come out this week, what Walmart has to say, and obviously what NVIDIA has to say. So I don't think we can look at the chart and do a forecast. I think this is going to be news driven, personally. So we'll be watching that intently. So that's what we got cooking. All right, my friends. Well, sit and watch. That's kind of the message that I've got to you. Pay attention, go to CNBC or Fox Business, wherever it is that you get your information, and be aware of the data that's coming in. It's going to make a big deal for you. Other than that, next week's Thanksgiving week. I've had to shift my schedule around. I'm going to do my best to get you out a market insight because I think that there'll be enough stuff that's worthwhile to talk about. So it's called 60/40. We'll see how that goes. Anyway, Until then, have a blessed rest of the week. Be good, be safe. Bye for now.